this is Carvana. And so is this. And this is how you can sell. And
Good evening, good evening, good evening, everybody. Everybody, everybody. Echo, you hear me? What's going on, man? How y'all doing this evening? I ain't gonna hold you. I I was sitting up here waiting for people to pull up in the Discord. In the Zoom. Then I remembered, I was like, man, I didn't even share the Zoom link.
Yeah, that's what we're waiting on.
I'm like, man,
definitely looking.
I'm like, where everybody at? I'm like, I was just on the phone with Lump, like, where everybody at? And then when I'm looking through the Discord, I'm sitting here just rocking to the music. I'm like, what's up, Deborah? Both of them fine. Both of them fine. What's going on, man? We got Here to Learn and Share. We got Sarah. Hi. We got Kim. Hey. What's going on, y'all, man? That's all gonna put something in the chat. Ain't nobody gonna put nothing in the chat. Hey, man, let's get to it. Good evening, good evening, good evening, everybody. If this is your first time tuning in to Tim's Tidbits, please allow me to say welcome. If it's not your first time tuning in to Tim's Tidbits, I still want to say welcome. And I want to give you a nice hearty, well, thank you for always tuning in to Tim's Tidbits. If you don't know who I am, my name is Timothy Lee Rogers Sr., a.k.a. Rania Grande. And I want you to know, I'm not a bull or a bear. I'm a beast. You hear me? Why to say that? Because we buy them, we sell them. It don't matter to us. And you are now in tune to another episode of the Intraday Price Action Recap. You hear me? And this episode of the Intraday Price Action Recap is being brought to you by Concur the Asian Session. There are 4 slots left for Concur the Asian Session. If you would like to participate in the Concur the Asian Session workshop, there is a link in the description below. I don't have one pinned in the chat today. Did not feel like pinning it in the chat. If you're in the gang, don't use that link in the description. Your link is in the announcement section of the Discord. gang, it's $100 for you. Everybody else that's not in the gang, it's $250. Link in the description. Now, today was Monday, the 14th of April. Tomorrow is tax day. If you have not done your taxes, make sure you do it or file an extension. Uncle Sugar wants his taxes. Speaking of, let's talk about that for a second, right? Because, you know, as traders, you got so many options for like how you want to deal with taxes, right? You can, you know, do like me. I just trade and I pay my taxes, right? Everybody be like, Tim, won't you set everything up as, you know, as a business and all of that right there? Because, you know, with my experience from when I was doing TLR, right? I'm not going to go through the trouble of setting up a LLC to trade through, because when I set up my LLC to trade through, tax purposes wise, a single person LLC is pretty much just like a sole proprietorship. It's, you know what I'm saying? Yes, you have a LLC umbrella, but when it comes to taxes, it's if it's a single person, you know what I'm saying, it's just like sole proprietor, right? So, and I don't have everything set up to where I want to like do it as an S corp yet, right? So I just pay my taxes, right? Pay my taxes, just trade under my name and pay my taxes. And I choose to, I pay my taxes monthly, right? Every month I pay my taxes on the money that I earn, right? And then you can do it how you want to do it, but I pay my taxes on my money I earn, and I do it just like when I was working and I had income tax withheld throughout the year. And then when I file taxes at the end of the year, you know what I'm saying, I hope to get something back, right? I just do it the same way. You know what I'm saying? I file my taxes monthly. You know what I'm saying? I pay Uncle Sugar. Look at what, like, I got state tax and federal tax. I live in Georgia, right? Look at your state to see if your state has a tax, right? If your state got a tax, right? Look and see how it works, right? How capital gains are taxed in your state, right? If it's taxed as regular income, you know what I'm saying, then pay it like regular income. If it's taxed, you know, whatever, however it is in your state, talk to your financial advisor and pay your taxes, man. Pay your taxes on your money. Don't get to the end of the year and then now you got this big tax bill because you made money all year, right? If you know what I'm saying, don't go out here and trade in your personal account or trade in these prop firms and, you know what I'm saying, get withdrawals, because every time you make a withdrawal, however much you withdraw at the end of the year, they gonna see you a 1099, right? Now they ain't gonna send it to you. It's gonna be in your account. You got to go inside, log into your account, go to your tax information and download the 1099. They ain't gonna mail it to your house, right? But trust me, they telling Uncle Sam that Tim Rogers took out X amount dollars throughout 2024, right? So download your 1099s, you know what I'm saying? And if you've been paying your taxes throughout the year, then you ain't got nothing to worry about. But if you ain't been paying your taxes throughout the year, then guess what? You probably gonna end up with an extra fee. Well, Tim, what's the extra fee? An extra fee is because if you ain't paid no taxes on this money all year, right? As a 1099 employee, right? They sending you 1099. So as a 1099 employee, you're supposed to pay a certain amount of taxes every quarter. You're required to pay a certain amount of taxes every quarter. So any money that you make between January and January and March, right? You got to pay so many taxes by April, right? And then between March, you got to pay so many taxes by then. And if you don't pay the proper amount of taxes throughout the year, right? Because like when I'm filing my taxes, it come up and be like, how much estimated taxes did you pay? And you go in there and you put in, I paid this amount Q1, Q2, Q3, Q4, right? But I pay it every month. But the amount that I paid in Q1, it go in this block, right? Q1, Q2, Q3, Q4, right? And if you don't pay enough on the money you made during this time, right, then you can get a late fee. Like just say you make $5,000 in Q1, right? But you don't pay no taxes until the end of the year, right? Then they be like, okay, you made this money back then, but you didn't pay no taxes to now. So now when you pay these taxes, you owe me a late fee from April all the way up into December because you were supposed to pay these taxes back in April, right? I'm not a tax professional, so don't take everything I say as the gospel. I'm just telling you how I avoid penalties and mess with Uncle Sugar, right? Because a lot of people, they trade, and they don't think about paying Uncle Sam because that money hit your account without any taxes coming out. Ain't nobody worrying about your taxes. They give you withdraw $12,000. They are not going to worry about no taxes for you, right? And me, what I personally do, I do the same thing I did when I was working. I just pay the most. I pay the most, and then at the end of the year, when I file my taxes, I just get a little something back, right? Tim, won't you just talk to a financial advisor and figure out when I run it as an S Corp, I do that. But for right now, I just pay the most. I pay the most, and at the end of the year, I just get a little something back. I get a little something back. Right. And I'm glad I always pay the most because whenever I'm filing taxes, for some reason, they don't never take enough money for Georgia out of my wife's check. And so the extra money that I be paying off the money that I make on Georgia, that help us from not having to pay a whole lot of money to Georgia. I don't know why before she started working in Alabama, I never had this problem. But when she started working in Alabama, I always owed Georgia. And then when she stopped working in Alabama again, now I always owe Georgia. I don't know what they did when she switched to Alabama for a little while, but they stopped taking out enough money for her Georgia taxes. So instead of owing a couple $1,000s to Georgia, right? Since I always pay too much on my side, then I only owe a few $100s in Georgia and get some back from the Fed. You know what I'm saying? But I said all that to say, make sure you pay your taxes, man. Make sure you pay your taxes, right? Talk to your financial advisor, CPA, or whoever you talk to, whoever keep your books for you, and say, hey, man, I want to make sure I pay these taxes because ain't nobody, you know what I'm saying? Ain't nobody telling me ain't nobody holding no taxes out, you know, make sure you pay your taxes. Same thing like when I paid off my house, right? They sent me the property tax bill. Now I got to figure out where to go pay this at. I'm calling, hey man, where I pay property taxes at? I don't know, man. I ain't never bought a house. Then I figured out where I had to go here in the city to go pay my property taxes. It happened to be the exact same place where you go get your tag. You go get your tag. It's just instead of when you in the line, instead of going to the right to the tag, you go to the left and pay for the property taxes. Right? The county clerk or whatever you call them. Right? But when you're paying for it, when you're paying a mortgage, your property tax and your insurance is in. That's what, if for those who don't know, if you don't own a house yet, let me school you real quick, right? Your mortgage, your total mortgage is comprised of your principal, right? That's what's going towards your loan, and then your escrow. Your escrow is your property taxes and your insurance, right? So just say if you pay $1,500 a month for your mortgage, right? Probably $900 is going toward your principal, and then 400 is probably going towards your property tax, and then the rest, 200, is going toward your insurance. And then they pay your insurance and your property tax once a year, sometimes twice a year on the S for the what's the name? So the principal goes towards your mortgage, then the escrow, right? It sit in escrow until it's time to pay your taxes and pay your insurance on your house, right? But once you pay your house off, now it's on you to pay that insurance and pay that property tax, right? I know y'all ain't click on to say that, but guess what? If you're trying to be a full-time trader that don't work for somebody else, this stuff you need to know. You need to know this stuff. You hear me? All right. Now, what did Price do anything today that shocked anybody? Let's get into it. Did Price do something today that took you by surprise? Like you was like, hey, I know exactly what Price gonna do, and then Price did something totally different. And you were like, whoa, 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 whoa. That caught me off guard, right? Let me know. Holla at your boy, and we'll get in the charts and see what we missed. Uh-oh, I couldn't see the comments, y'all. I'm sorry, the comments was hid. The market treated me all right today, man. What's up, Joker? Shout out, Joker. The market treated me all right. I got caught up in some chop and got busted across my head. I took I had a small barely I just say break even trade, and then I got back in, took a loss, right? Believed in what I was doing, got in, took another loss, right? Believed in what I was doing, got in, got back slightly in the green, went to lunch, right? Chilled out for a little while, came back in the afternoon and traded the micros and studied the mini, traded the micros and studied the mini, and did very good, and instantly got pissed off because I was like, if I would, no, I'm just playing. I don't never say if, right? I don't never say if, but it's like it was a beautiful trade. And if I would have still been trading the minis, then I wouldn't even need the trade to run as far as it ran, because if I'm trading the minis, all I need is just a little blunt. But I was trading the micros, and it was a beautiful trade. So the market, it treated me well today. I just got caught up in some of that mid-morning take your money, But it happens. It's like I'm used to it now, because I take read in the morning with the gang, and by the time I'm finished take reading, right, I'm usually in that mid-morning take your money chop, right? So either and I don't like trading the afternoon too often, so I be trying to go ahead and make my money, you know what I'm saying? But sometimes I'll be like, I'm just gonna wait till the afternoon. But today I was like, hey, the market been trading pretty good. It's been in this little range that's been trading pretty good, but I got smacked up a little bit, but nothing to complain about. Missed two beautiful entries. Never say the Russells. Don't say that. Don't say, you know what I'm saying? Just say like let's see, you said missed two beautiful entries, 10:05 and the real one at 10:55, hesitated and missed, right? Say as I observed price this morning, I saw a textbook setup play out at 10:05, and then later another textbook setup at 10:55, which yielded the expected price move or whatever, something like that right there. Something right there, right there. Positive self-talk, right? Textbook short. I gotta get this yard work done. Catch the recording later. Hope everyone is well. And then you probably ain't even hear what I said just now. I should have read that one before I read the first one, and then I would have known not to waste all that energy answering that. Right? What's up? Hola, Valentine. What's up, Felicia? What's going on? Empire Traders. What's going on? Empire Traders. How everything? You still trading them prop firms? Or you done blew up the spot. You still trading them prop firms? Got a payout yet? Or you done blew up the spot? Don't feel bad if you blew up the spot. We all do it. Yes to what? Yes, you still trading them, or yes, you blew up the spot. Sloppy AM, but afternoon was nice recovery. Okay. 1 p.m. manipulation candle. I don't know what a 1 p.m. manipulation candle is, but I work with you. What was that all about? I don't know what you was asking about. 5 seconds, 5 seconds, 20 ES points, I think. Okay. Oh, you saying what was the 1 p.m. manipulation candle all about? I don't know. I don't know. Let's go to the charts. Let's go to the charts. Let's pull up the economic calendar. Look at the economic calendar. Today at 1 p.m., we had Christopher Waller speaking, right? I had something flash up on my phone that said Christopher Waller said something about Waller said tariffs is transitory. Tariff inflation is transitory. Who in here remembers the whole transitory inflation is transitory debacle? If you remember, all transitory was a very, very, very bad word for the feds to be using when they talked about inflation. That was a very, very bad word to be using. That was a very bad word. And I got a notification today, and it said was it? I thought it was I thought it said Waller. Because I remember I was on the phone. I was on the phone with my mom and my brother and my sister, and I looked at it and I was like, and I said, they said tariff inflation was transitory. I said, uh-oh. They didn't use that transitory word, but I don't see it here. I don't see it here on the thing. I remember reading it, because when I saw right there, there it is right there. Fed Governor Waller sees tariff inflation as transitory in tush push comparison. That right there. I'm not sure what time that popped, and that was at 1 o'clock right there. That was at 1 o'clock right there. So that's probably why it did something crazy. They used that very bad word, transitory, in relations to tariff inflation, right? So that's probably why it did something crazy. And you see that right there, they dropped at 1 p.m. Okay, so that's probably why it did that. Then we got a 1 p.m. right there. That's the 1 p.m. candle there. And then on the ES, this is the 1 p.m. candle. That's a 60-minute candle right there on the ES. Right, that's the 1 p.m. candle right there. Right, so they use that word. Right, they used that word. They said tariff inflation was transitory. What is tush push out there? See, that's why I remember it, because it had that funny little tush push thing. I'm like, what in the world is tush push? That got a little Diddy implications on it. That has some Diddy implications on it. Oh, it says a football term. A football term. I never heard of tush push. I ain't gonna lie. We just call that a quarterback sneak. We call that a quarterback sneak. We ain't call that no tush push. Right. They push from behind with that's a see right there. Quarterback sneak. Right. Right. Multiple players pushing behind him. I guess that's why they call it the tush push. We just called it a quarterback sneak. Right. Snap the ball and just go straight forward. Right. We ain't call it no tush push. All right. So Wallace said Monday he expects the effects of President Donald Trump tariffs on prices to be transitory. The central banker embraces a term that got central bank in trouble during. Remember what I was saying? I just said this right here. They got them in trouble. Last bout of inflation. They could not say that. Since it didn't work out the way you expect, does this mean you shouldn't call for the tush push on the next time? Okay. So he's saying just because it ain't work out last time, don't mean you shouldn't call for the tush push again. Right? I mean, hey, we screwed up saying it was transitory last time, but hey, it's not a bad call. It's a good call. We can call it again. Right? Okay, so just based off of this quick little research, I'm gonna say that's why the algorithm went crazy. Man, we ain't gonna try Jalen. Jalen, my dog. Jalen ain't out there talking about no tush push. Jalen is not talking about no tush push. I'm sorry. Jalen do quarterback sneaks. That's what Jalen do. Jalen do quarterback sneaks. Jalen don't do no tush push. He don't do no tush push. Stop playing. All right. Okay. All right. I guess besides that right there, I guess everybody else good on price, right? So we're gonna call that mystery solved, right? The transitory word was used, right? The algorithm went crazy, right? Transitory word was used, algorithm went crazy, right? That was the 1 o'clock thing. What's happening, CZ? No, sir. No, sir. Jalen is not doing no tush push. Jalen is doing quarterback sneaks. That's it. Patrick Mahomes can do some tush push. He can do it. He can do some tush push. You know what I'm saying? Who else? What the Lions? Do he still play with the dude that's played with the Lions? He used to go to Georgia. He used to play for Georgia in college, and he was the quarterback for the Lions for a long time. I don't watch pro ball. I just know certain players because I watch college ball. What the dude? Man, the dude he played for Georgia when he was in, and then he was playing for the Detroit Lions for a long time. I don't know if he's still there. Oh man, that's gonna drive me crazy. He can do a tush push. No, it's not Jared Goff. He must be ain't there no more. He must be ain't there no more. It ain't Jared Goff. He ain't there no more. It's Matthew Stafford. That's his name. Matthew Stafford can do, Matthew Stafford. He used to play for Georgia. Matthew Stafford, he can do the tush push. Yeah, I don't watch pro ball like that. I just watch, I know certain players from college. Players I liked in college, I be following them in the pros. You know what I'm saying? I follow them in the pros. But I don't be knowing who's still on what team because I don't watch pro ball like that. Matter of fact, I don't watch the Super Bowl. I just wait for the commercials. And like if my son want to watch it, I sit down and watch it with him. But I don't really watch the Super Bowl. Every Super Bowl, I go for whoever the underdog is. If they, you know what I'm saying? If they're underdog, I just go for the underdog in the Super Bowl. That ain't why y'all came here, man. Y'all came here to talk about the intraday price action, right? The intraday price action. We are, y'all hold on for a second. What's going on?
What's up? How long you already start shooting?
Yeah, I just started. What's up? How long y'all? I seen y'all was like at the college. All right, sorry about that, y'all. My boys had just came in. Say Jalen can bench 600 pounds. Jalen benching 600. Man, speaking of benching, I I don't care what this say. I don't care what this say. Jalen ain't doing no push. Hey, as y'all see, we had a huge gap up overnight. 400, well, over the weekend. For those who don't know what a new week opening gap is, a new week opening gap is the difference in price from the futures close at 5 on Friday and the futures open at 6 p.m. on Sunday, right? So instead of a 1 hour halt, it's a halt over the weekend, and it starts because there's no futures trading on Saturday, right? So you halt Friday night, it's closed all Saturday, and then it's closed Sunday during the day, and then Sunday night it starts Monday's trading, right? So that's your new week opening gap. The closing price at 5 on Friday, the opening price at 6 on Sunday. And it was a 404.5 point gap up, right? Huge gap up. All right. So we gapped up, and then we traded down, zoom out. See if we can get some higher time frame references, right? If we zoom out to a 4 hour chart, oh, it's Monday. So let's do this right here. Let's go up. Let's go up to the weekly chart, right? We're going up to the weekly chart. So since it's Monday, we're going to get our bearing together. Last week, we came down to a anticipatory reactionary point on the weekly time frame. If I can find it. Boom. Right? We came down to a a bullish fair value gap on the weekly, right? Came down just below consequent encroachment, had an amazing rally off of it, right? Opened up, traded down to it, and rallied all the way back up there from the low that we made just below consequent encroachment up to the price where it closed at was 2,360.5 points from when we bottomed out at that fair value gap, and then where the price closed on the week, 2,360.5 points. And that wasn't even the peak. It went all the way up as high as 2,926.75 points off of that fair value gap. But it, settled it off there. 14.75% from the low. It closed 14.75%, 14.34% from that bottoming out low, right? It was a 7.65% weekly close, right? Right. That was it was a 7.65 gain on the week, because where it closed at the prior week to where it closed at that week, 7.65%, right? So a very very bullish week, right? So now what you watching for in price, right? What you're watching for in price, our monthly, right, is in an uptrend. Bullish order flow is intact for the monthly, right? We have had a retracement. We have taken out internal liquidity, come to a bullish order block, right? And we're having a strong reaction off of this liquidity, this discount PD rate, because this is equilibrium of our overall range from October 2022 up into December 2024, right? So we come to a discount PD rate, having a strong reaction off of it. Ran liquidity, right? Discount PD rate, strong reaction. Okay. So the monthly, right, is bullish. We're just having a retracement, right? Order flow is bullish. Weekly, right? The order flow is bearish. We're in bearish order flow right now, right? We're in bearish order flow right now. Okay, Tim, it's bullish also, but the weekly has started to respect what was that? Oh, start to respect premium PD raise and pushing through discounts, right? So it's in bearish order flow right now, which is to be expected because the monthly needed to come back to a discount, right? So that was expected. Now we've come to an anticipatory reactionary point. So now when you hit an anticipatory reactionary point, you want to watch for signatures. What signatures are we watching on this weekly? This last week's candle, right? If this is going to act as an immediate rebalance, you would want to see this week at the latest 1 week over. But I give it 2 candles. But you want to see this week here get out of here to the downside, right? If we don't get out of here to the downside with this weekly candle at the latest, the next weekly candle, then this trading back up into that March 24th weekly candle, that right there is not an immediate rebalance, right? Because the immediate rebalance is going to immediately rebalance the inefficient area and gig it gone, right? Gig it gone. Okay, so right now we've offered buy side delivery. We offer sell side delivery and buy side delivery there, right? So it's been efficiently delivered in this area. So now if it's an immediate rebalance, it needs to get out of here, right? But if it's not immediate rebalance, it could mount up a rally, right? Or it could just hang out here for a while, not be an immediate rebalance and still drop, right? But when it's exceedingly bullish or bearish, you want to see continuous movement, right? You want to see continuous movement. Okay. Watching to see if that's an immediate rebalance. All right. There's no weekly imbalances up here to trade to, nothing up here but buy side liquidity on the weekly, right? You got, this is the buy side liquidity, right? We got last week's high there. That's liquidity on the, that's a buy side liquidity pool on the daily time frame. We'll talk about that later, but that's your buy side liquidity right there on the weekly chart. There's no imbalance to look at up there, right? While we're here on the weekly, let's check, see where we are. We're still in a slight discount, right, from this last piece of price. And then for the overall, you know, entire dealing range, yeah, we're still in a slight discount, right? Still in a slight discount for the overall range. For the last price leg there, right, we're up here in a premium, right? We're up here in a premium in between the upper quadrant and the consequent encroachment, right? Got dog, wrong way. Quads, right? That's your upper quadrant. That's I said consequent encroachment, equilibrium, right? Upper quadrant and equilibrium, right? We're in between those two areas right there, right? Look calibrated, I just going to work, just looking at where we are in price. On the daily time frame, right? So for the daily time frame, we have come back up, created inversion fair value gaps here, right? Remember last week was like, you want to see these support price for the bullish narrative. We came back down, traded into this. We was watching to see, is this candle here going to act as an immediate rebalance, right? This next candle started out very strong, looking like it was going to be an immediate rebalance to push price up into, God dog it. Feds watching. The feds are watching. Okay. Say again.
Do you have like a bucket?
Not only bucket I got, it would be like the buckets out there in the shed.
Yeah, I thought so.
I got a garbage can right here. This ain't big enough, huh?
I'm not using that.
I mean, the bucket, this trash can just as clean as the bucket is. But what was I saying? Oh yeah, I was looking to see if this candle here from the 10th would act as an immediate rebalance, right? We blast off, created an inverted fair value gap, traded back down into the candle from the 8th of April, right? This candle started out strong, looking like it was going to be an immediate rebalance to push us back to the buy side liquidity right there. But then today we traded back down into that candle there, right? So that right there for me is not an immediate rebalance to continue up because we did not leave this area, right? Looked like we was going to, but not so quick, right? Now, we could just be in a little holding pattern before blasting off, but right now, since we're in this holding pattern right here, now I'm seeing this as I'm just going to wait for more information, right? I'm going to wait for more information because now the algorithm is starting to engineer liquidity, right? We're starting to engineer liquidity. We had a nice move. Then we came back down, right? And then now we're chilling here. 1, 2, 3 extra days, right? Not leaving this. Okay, now we're just engineering liquidity right here, right? We're engineering liquidity right there. Now, we zoom out. Let's zoom out and look to see. All right. Okay, we come back up, right, into all of these structure breaks here. And now we're just engineering liquidity there. Right, we're just engineering liquidity there. Every time we hit this area, price kind of hung out there for a while. We hung out there, right? On the lower end, we hung out. The upper end, we hung out. We hung out there. We hung out there, right? And now we're back there again, right? So when we come to this area there, price just kind of hanging out there. It's seeing that area as some type of fair value. Let's go to the top of the tip top. Right. Let's pull this down until we get our Fibonacci right there where we are. Okay, boom. And that's our October low. No, that's a different, that's October 2023, right? Our low we was looking at was October 2022, like down here somewhere. Wherever it was. I don't know. It was like October 2022. So at least that's what I wrote on there. Right there. Right there. That low right there. Okay. Yeah, that low right over there. So from October 2023, right? Y'all see how I did that? Right? Y'all see how I did that? I was like, hey, the algorithm seeing this as an area of fair value. Let's go back and see, you know what I'm saying, what range that the algorithm is using, right? So I go to the highest high, right? Because we're dropping down. And I just grabbed my Fibonacci tool and I pulled it down until the 50% was right over here where we're hanging out, that area. We hung out there, we hung out there, we hung out there, pulled the Fibonacci tool down to 50% was there. And then looky, who stole the cookie? I'm right there at a low. Boom. I'm right there at that low right there from October 2023. Right? So that right there is the range that the algorithm was working in, right? That dealing range right there, right? How do you know that? Because we came down here, right? Just above, punched up, dropped down to a slight discount, punched up, dropped it like it was hot, down to this weekly imbalance in the discount, then rallied back up, and now we're back at equilibrium and we're consolidating again, right? Price tends to consolidate at equilibrium, right? So we was consolidating there. I looked back, I saw we consolidated there. We saw we consolidated there. Saw we consolidated there. Said, hey, let's figure out what this is the 50% of. Went to the highest high, stretched it down, boom, right there, right? Right, and just like that, right? Just like that, right? So we're right smack dab in the middle of that range there, right? The dealing range that we were focusing on, this was equilibrium. When price pulled back, it pulled back into the discount of the dealing range, with October 2022 being the low, right? That's equilibrium there. And then now that it's retracing back and it started consolidating there, right? Now we see that inside, what was our low? Over here, right here, right? So this low here, all the way up to there, that's our entire dealing range, right? And then if we notice here, all of this right here, right? But with this trading back down, this right there is a portion of this dealing range. So this dealing range here that's inside our overall dealing range, right? Price is trading inside that right there, right? That portion. If you know about dealing ranges, when you have a dealing range, and you can see here, this is very efficiently delivered at the bottom. Very efficiently delivered, bunch of back and forth, right? Get above that high right there. You got buy side and sell side delivery there, right? And this right here is the last expansion. This is really the last expansion, but from these depths down here, this is the last expansion part of the overall dealing range. So you're focusing on this part of the range until you get below here, right? And so when we come down, we touch that weekly imbalance, and now we're moving back up to equilibrium right there. Nice little dealing range segment. Nice little dealing range segment real quick. If you didn't get nothing out of that, hey, sorry for you. That was pretty good stuff right there. Rewind and look at it again. Gang, y'all know what's up. But the diamond members, y'all know what's up. That probably made perfect sense to you because we've been focusing on dealing ranges for this month. All right, so we hanging out there now. Not much to look at on the 4 hour, right? We was just hanging out here in this, ranging right there. We're still inside that little range area there. Now looking at the 4 hour time frame, right? 4 hour time frame is in a buy program, right? It's in a buy program, looking for price to draw up into the buy side liquidity there, right? The buy program is still intact, right? We've come up, we've had a bullish breaking market structure, traded back down into, excuse me, the bullish fair value gap into the bullish mitigation block, right? And we've moved back up and we're still respecting the discount PD raise, right? Still respecting the discount PD raise. So the buy program is still intact, but we're not doing anything at any lightning speed right now on the higher time frame. Nothing going on at any kind of lightning speed. Looking at the 60-minute time frame, right? We gapped up, had a huge gap up, right? And then we left a nice little liquidity void here. Right, we had a nice liquidity void there. If you don't know what a liquidity void is, a liquidity void is no buy side delivery or sell side delivery. I don't have anything that marks that out. No buy side or sell side delivery inside of a price range. no buy side or sell side delivery in that area. All right. So then we traded back up and we came up, and did we take out the overnight high? Yes, we did. Right. We took out the overnight high. And then once we took out the overnight high, price dropped back down, taking out the London low. And then so taking out the overnight high, dropping down, taking out the London low, right? What is that? What does that give us? Went up, took out the overnight high, dropped down, took out the London low. What did that give us? Anybody? Anybody?
Is that a Judas or no?
Yes, Judas swing, right? We went up, took out buy side, dropped down, took out sell side, right? During a specific time, right? Going into the New York, that's the 9 o'clock hourly candle. So going into the New York, we got a Judas swing, right? Took out buy side, took out sell side. Once we took out buy side, took out sell side, right? You can see everything is very efficiently delivered on this hourly chart, but you see here, this hourly candle gives us a retracement. Then this hourly candle gives us a delivery into the liquidity void and the prior day high. Traded back down into that prior day high, repriced the liquidity void, repriced the rest of the new week opening gap, right? Traded down into the bullish order block. Right. Then the 12 o'clock candle, we traded down, still respecting the bullish order block. Bodies closing, still respecting the bullish order block here. Right. Go from wick to wick on the order block. Right. We're closing above mean threshold. Right. We go body to body on the order block. We're closing above mean threshold. Right. So totally respecting the bullish order block. Excuse me. Trade back up and repriced the entire 11 a.m. SIBI, right? 11 a.m. SIBI, repriced that entire SIBI, open up on 3 o'clock candle, trading back up into the bearish order block here. All right, so we got us a bearish order block there, come down, wick to wick, don't make it to mean threshold, right? Body to body, put just above mean threshold, right? We got a long wick on the top, so we look at it from body to body. I always like to check the entire candle, but when there's a long wick, I typically just focus on the body, right? So body to body went above mean threshold of the bearish order block, and then drop back down, trading all the way down through the 1 p.m. BSI, all the way down, almost reaching the rejection block there, and closing out below consequent encroachment of the 1 o'clock BSI. Let's go down, look at it on 15-minute time frame, starting at New York. All right, so starting at New York, over here, 9:30 candle here. All right, 9:30 candle, went back up, create equal highs. Was it an equal high to when we took out? Just fell short. We had just at 9:15, we went up, took out that overnight high, right? 9:30, we opened up, just fell short of the new high that we had just made, dropped down, taking out the sell side, right? There's the Judas swing, right? Remember we said our Judas swing, right? So we got our Judas swing, 9:30. We opened up. It started a little bit before 9:30, but still 9:30, we went up, dropped down, right? Created a SIBI, okay? After taking out sell side, traded up, right? Traded almost to the high of the SIBI. Then we moved up, and then the next macro window, we traded up into the order block, repricing the entire SIBI, traded up into the order block, and then we made a huge drop down, straight down, all sell side delivery from 10:45 all the way up until 12 p.m. right? Which really would have been 12:15 because it's a 12 p.m. candle, right? So from 10:45 to 12:15, straight sell side delivery, right? Going down straight sell side delivery. What is this here for? Oh, that might have been something that I was watching during some trading or something. Anyway, Then once we make that low, price started to engineer some liquidity down here at the prior day's high, right? Started engineering liquidity there. Once we engineered liquidity there, going into 145. So we start the PM session here at 130, right? When the PM session kick off, we displace away all buy side delivery, not even giving a retracement opportunity, all the way back up into the top civvy, right? All the way back up into the top civvy. And then we sold off, coming back down, dropping back down, very close to the rejection block, coming down into the bullish order block, and then trading up and closing off the day here. Closing off the day off of the low up here, back there below consequent encroachment of that 145 bullish fair value gap there. Close off the day there. We'll go all the way down to 1 minute and go back through at New York. All right. So starting out here at New York. Right here, it's 9:30 open. Right, 9:30 open there. Right, that's our 9:30 open. I'll put it there so we can see it quickly. Right. That's our 9:30 open there. Double click it, make it bigger so we can see those numbers. Okay, so got our 9:30 open. Like we said, we traded up here. Did not take out the high. We had just taken the overnight high here. Boom. Just took the overnight high, traded up, right? Did not take out that high, right? So that's a signature, right? That's a signature in price. We didn't talk about the signature this morning when we were talking about price, but we did mention, right, looking to see if price was going to come back to the midnight open and take out the take out the sell side liquidity, right? The London low, right? We said we had internal sell side there. We had the London low and midnight. We talked about price trading back down into these areas right here, right? Into these areas there. Now, what would prompt me to say is price going to go there? Because when we started out, come here. We start out. This is our buy side liquidity there. When we first started out before the 9:30 open, that was our buy side liquidity there. All right. That was our overnight high. This right here was our overnight low. All right. That's our overnight low. And then this right here was our London low. All right, let's get this over here. I'm gonna put this over here. When we start reading the price, it'd be like, I'll just put it here because we start at 9 o'clock. Right, so we get a feel for what price look like when we start. Okay, so all right, so our overnight low here, our overnight high there. Right, our London low is some internal sell side, right? Internal sell side, and it's resting right at equilibrium of the consequent encroachment of the new day opening gap, right? So we got time-based liquidity at consequent encroachment of the new week opening gap. All right. We are a stone's throw away from time-based liquidity here just before the open, right? We have just engaged with the London high. Okay. So we have just engaged with the London high, right? So as we're going into price, this is our New York kill zone. Let's mark out our New York kill zone. Y'all better let him cook, right? So 7:30 is the true start of it. What's up, son?
Will you get a chance? Hey, come record this for. Actually, do you have like a little phone stand?
No. Hold on. Y'all hold on for a second. All right, sorry about that, y'all. The adventures of Super Dad don't stop. So, all right, not to make it more drawn out than it need to be, right? When you're coming into your session, right, you want to look for you can do it several ways, but this way right here, we're looking at our prior session, right? This is our dealing range from our prior session, right? That's our highest high, that's our lowest low, right? Once we establish a range, right, we wait for the algorithm to engage with one side of the liquidity, right? Coming into the New York kill zone, right? I like to start from 8:30, right? This is where I like to start from because it's the US indexes, but the kill zone is 7:30, right? So at 8:30, you see we rally and we engage with the buy side, right? We engage with the buy side. So now this is our we have engaged the buy side. So once you engage the liquidity, then you look for signatures to see if price wants to continue or if price wants to engage the opposite end of that dealing range. Okay. Now we got that foundation laid. This is what price looked like when we started mapping everything out, right? So now, once we came over here, once we came up and engaged here, right? Once we engaged that, now what have we done? We've engaged the buy side for our overnight dealing range, right? So we're looking for signatures. Does price want to continue higher or does it want to engage the opposite side of the range, right? All right. So once we took out, right? Once we took out that buy side there, now price is not showing a willingness to just continue up, right? It's showing it dropped down and it created an inversion fair value gap here, right? It's not showing a willingness to continue up, right? Since it's come down, created an inversion fair value gap, we have a change in the state of delivery here at a high. All right. So once we get that, right? Once we get that change in the state of delivery at the 9:30 open, we come up and we do not take out that high, right? We do not take out that high and we drop, right? So when you don't take out that high after running liquidity, right, and you got a change in the state of delivery, that right there is a signature that price is going to, highly probability that price is going to reverse. You're coming up, you're trading up into a rejection block and dropping off, right? Right, dropping off. That right there is a signature that price is going to drop. But we were looking for price to come back to midnight, right? And the London low, because we had this huge liquidity void down here that could act as a magnet for price because there was no buy side or sell side offered down there. So that's why when we came in, we said we're looking to see if price will give us an opportunity to come back to this London low below midnight, right? And then boom, that's what it did. It came down, took out took out that London low, right? Dropped down, took out the London low below midnight, right? Then it traded back up into the first presentation on the 1 minute, the 1 minute first presentation fair value gap, right? And then we came down, traded back down below midnight again, traded back up again to the first presentation, right? Hung out there for a minute. And then when we went into the 1050 to 1110 macro, right? We manipulated out the highs, took out the buy side right there above the first presentation, right? Took out the buy side, dropped down, right? Created a SIBI right on top of the first presentation, SIBI over here, right? Created a SIBI there, act as a breakaway gap because we formed one fair value gap, then another fair value gap, right? So breakaway gap right there where the first presentation was, breaking market structure, traded back up into the bottom fair value gap, did not trade back to the breakaway gap. Then price proceeded to drop down, gave opportunity to get back in right here at this fair value gap there. Then it continued to make its descent all the way down into the liquidity void and below. And then we just hung out there at the liquidity void up until the evening session, right? Traded back up, hung out in that liquidity void until the evening session kicked off, traded back up into Let's talk about that 15-minute fair value gap right there. Right? Do anybody know what that 15-minute fair value gap is for? Do anybody know what that 15-minute fair value gap is for? And not somebody that was on the tape reading session this morning. Right? Do anybody know what that 15-minute fair value gap was for? And if you need a clue, I'm going to give you a clue. All right. If you need a clue, I'm going to give you a clue. This 15-minute fair value gap right here. Welcome, Venus, to the black spot. Venus. Wait a minute. I know that name, Venus. Venus, you came back? Came back, Venus? Do anybody know? Don't nobody know what that 15-minute fair value gap is for right there? Y'all ain't see the clue I'm giving y'all right there? Who is this right here? Who is that? Do anybody know who he is?
That's Ant-Man.
Hey, Deborah. How you doing, Deborah? It's Ant-Man. What's up, son? Oh, y'all, hold on. Y'all give me 1 second. I'm sorry. Got to do something with my son. Y'all still ain't figured out what that 15-minute fair value got for. I'm going to leave it like this, and I'm leave Ant-Man there, and then y'all tell me when I get back. Hey, Deborah. Deborah, you can tell him.
Lump, you don't remember what that 15-minute fair value gap is?
Nope.
Oh my God. I don't remember either.
What time is it from?
15-minute.
No, like what time was it made?
Mm,
I think it was at 11 a.m.
mm.
Did he call it the first presentation?
Yeah, I think that's what it is.
Oh, maybe
Yeah, it should be the first
for the
presentation.
month. Maybe.
No, I think it probably was just for the day, first presentation for the day. I'm not sure. I'm just guessing if it
No,
was that.
look, it go way back. I can't see the date, but go back to maybe the 10th. Where's Jim? Where's Jim?
He was just chatting with us. He don't know. He said he thought it was the first presentation. Jim got all the answers, right?
Here to learn and share. Rhonda?
We on our own.
Y'all know the answer to that.
Uh-oh. Who was that?
see.
Maybe when he come back and repeat the question, we'll give it. He say, why did he put it there or what was it?
He has, do we know why it's there?
Okay.
Let's see.
Yeah.
Okay, what y'all talking about?
Oh
When you
Lord.
put it, when you what was the question again?
What was the 15-minute fair value gap for?
What was it for? I don't know. We were just having a study session. It might be the first presentation.
Nuh-uh. That was
Mm-mm.
that was the a busy. That was a busy from the New York session that we hadn't traded to yet, because we go back to, let me go electronic hours, right, and then come back to 9 o'clock, right? 9 o'clock we start watching price, and then go back to regular trading hours, right? See, here we go. Here, this is what price looks like, and then, well, let me go to 9:30. Get out of here. Let's go to 9:30. Let's go to 9:31. Oh, I need to put it on 1 minute candles. All right. And then we go to 9:31. Uh-oh. Not right there. All right. And then go to regular trading hours. Boom. Okay. So now you see here, right? Price is here. Price is there. Right. And if we look back, if you look back through, like here on regular trading hours, we can see it clear. Right. We got a 15-minute BISC sitting right there, right, with like some internal sell side. We got internal sell side there, right at that 15-minute BISC, right? We also got internal sell side here also, right? And we've already traded down into that one. Okay. So internal sell side there, internal sell side there, and then the BISC right there, right? So when you put it in regular trading hours, you can see that. Right? 15 minutes. Right. Look at 15 minutes here. You can see that there's a BISC there. But since I got that counter there, you can see it's within them 15 minutes, you can see we traded down to it. Right. So, but when you have it on 1 minute count or whatever, and you're looking at it in real time, right, you need the assistance of our little buddy Ant-Man to be able to see here, this is where price is. Ant-Man can look through these candles and see that there's no New York trading session activity going on here. And he can look all the way back and see that 15-minute fair value gap right over here, right there. You can see that 15-minute fair value gap right there, right? Because all of these candles here, right? If you look at the bottom down there, right, you see that these candles here, all of this is during like the PM, right? That's during the PM time. So we haven't traded back to it on inside the New York session, right? Inside the New York session, we haven't traded back to that. All right. So as it opened up now, we have a discount PD array, discount bullish PD array here, right? We got our London low that we're anticipating price to draw back toward, because we have taken out the London high, right? right? We engaged the London high prior to the New York session starting, but inside the kill zone. And then we engaged the overnight high prior to the New York session starting. And then once the New York session started, right? Once it started, price was unwilling to make a new high, right? So we traded up, right? Took out the high, right? Dropped down, created an inversion fair value gap and a SIBI. When the New York session opened, right, we repriced the entire SIBI, and then we traded up, did not take out the high, hit the rejection block, and sold off, right, creating another inversion fair value gap, right? Then we come back, right, looking to see if this acts as an immediate rebalance, right? See if it acts as an immediate rebalance, because we're going to put the meat back on the bone. No need to keep everything off. We already got it, right? So come here, we see that we trade back up into this 930 candle, right? Repriced all the way back up into the 930 candle, then came down, closed down here. So you're watching to see if this acts as an immediate rebalance. The next candle trades up past consequent encroachment back to the high of this 5-minute bullish fair value gap right here, right? This candle there, no, that didn't, right? We don't have it. We closed below consequent encroachment, but we don't have an inversion yet, right? And then we starting to move away, right? So that is an immediate rebalance. We're starting to move away, get out of there, right? Came down and attack that low, right? This candle here dropped down. This candle here took out that low, right? So that is an immediate rebalance right there. And then we drop down, creating our first presentation fair value gap on the 1 minute, right? For those who for those that was privy to watching us Friday, I think we was breaking down, right, not only the first presentation, but breaking down, like, seeing the real inefficiency, right? Looking for the real inefficiency. And we see that we've offered is very efficient delivery here. We offered buy side, we offered sell side, and then we left that area. So now we're looking at all of this right here as a balanced price range, right? This is the first fair value gap that was after 930, but it's also the first fair value gap in trading, period, right? Even if we would have created a little fair value gap, a little imbalance up here, this would be the first fair value gap because it's outside of this efficiently delivered area, right? Then we have the first presentation acting as a breakaway gap. Then we form a fair value gap here, and then we ran the Fibonacci tools here, right, and put it on 50% of this gap right there, right, and said, okay, if that's going to be used as a measuring gap, it comes down to our target that we was looking at as the London low, right? And as you see there, right, we came down, we took out this well, first we came down, retraced back up to it, then we came down, took out the internal liquidity, then came down and took out the target, right? Based off of this being a measuring gap to that area down there, right? And then once we came down and hit the sell side, traded up, took out the sell side and displaced up, right? And then we traded back in. Then notice once we took out the sell side and then swept sell side and displaced up, all of the candle bodies are respecting this 15-minute BISI from the prior session, right? Once we got that displaced up, all of these candle bodies here are respecting the BISI, right? So we trade back up into the first presentation. We drop back down into the rejection block, right? Drop back down into the rejection block there. I think we talked about this earlier when it was like, okay, we came down and we oh no, this is where we talked about it over here. We said we came down and we closed. We got a closure inside the rejection block. So we want to see some movement away from that right there. Right, came down, got that closure inside the rejection block. So liquidity has been swept there, right? Because we came and got a counter closure down inside that rejection block, right? We popped down below that swing low there, running liquidity, and then we took off and blasted off back up to the first presentation. Right, came back, did the same thing again. We got a closure inside the rejection block right there. Right, got a closure inside the rejection block, opened up, traded down, blast off. Right, gave you a chance to retrace back into the order block, blast off. Right, retrace back, and finally made a way up and took out the buy side here. Right, we took out that buy side right there from the prior macro window. Right. We came here, poked above that buy side there. Then we traded down, taking out the sell side, right? Traded down, taking out the sell side, indicating that it wants to go lower, right? And then as we came into the new macro time, right? What do? We traded up, swept the buy side liquidity, and then dropped down, taking out the sell side, giving us the real Judas swing, right? Here, we got a Judas swing there, right? We did. We got it up, down, Judas swing there. But then we went into a macro time, right? Time and price, up, down, right? So once we hit that macro window, Judas swing, trade back up into the imbalance, left the breakaway gap, drop down, right? One more chance to get involved here, took out the liquidity. And then the rest is history. We know what it did for the rest of the day, right? But those are just, I just want to go through and walk through and look at some of the algorithmic signatures throughout price today. And we done been on here for a while. My food out there getting cold, but I will open it up for questions if anybody got any questions. Does anybody have any questions? Also, if this was helpful to you, put a 1 in the chat or say yes if you're inside the Zoom.
Man, every
Yes, it
session
was
helpful to me.
it was helpful for me.
Max K put a 2. What is 2, Max K? What is 2, Max K? Always helpful. Sorry, Ant-Man ain't get a chance to do a whole lot of talking. I was doing some stuff with my kids. My kids had me doing some stuff. Ant-Man was about to come through, man. He was about to come through and break it down for y'all. But by the time I got back, Ant-Man had to went to sleep. Ant-Man had to went to sleep. All right, man. Since we ain't got no questions, I guess we'll go ahead and call it there. We will go ahead and call it there. Tomorrow is Tuesday. Tomorrow is Tuesday. So no tape reading tomorrow. Right? Tomorrow is Tuesday. So no tape reading tomorrow. Who in here? Let me see who in here. If you in
Me?
here, right? If you in if you in here right now and you not a diamond member, right? If you in here right now and you're not a diamond member, if you're in here right now and you're not a diamond member, but you're in the Discord, right? Send me a DM right now. Just DM me right now, right? And it's 7:37, right? It's 7:37. DM me right now. Any DM I get after 7:39 is gonna be too late, and I will send you a link on for Wednesday's tape reading, right? So it's 7:37. Just DM me on Discord right now. If don't nobody DM me before 7:39, right? You will not get a link for the tape reading. Just DM me if you're not a diamond member. If you're not a diamond member and you want to be a part of the tape reading for Wednesday morning, DM me right now. I see somebody DM me in the wrong Discord, so I can't.
So you don't want it in that one. You want it in the other one.
Somebody DM me in the old Discord server.
Oh, you know it was me. Don't call names.
I just saw something pop up in the old Discord server. I don't know what's going on over there. All right. Something just popped up in the old Discord server. All right. Let me see, it's 7:38. It's 7:38.
Is that right? For a big spider, right?
Yeah, big spider.
Okay.
Somebody put something in the main chat in the old Discord server.
Oh, that was me too. I just want to make sure.
You all in the wrongs. I told you I don't be in that server. I don't be in that server no more. You don't remember when I put the little saying goodbye on there? This right here. You remember when I put that on there? When you said goodbye? Right
yeah,
there?
but you sent an invite one time.
No, I didn't. Oh, no, I didn't. I ain't sitting nothing over there. Okay, 7:39. That's it. So I got Kim. Kim, you only had to send it one time. I got Kim. I got Sarah. I got Valentine. I got.
Don't play.
I'm trying to see why I don't see you. I see your name, but I don't see your thing.
You said for a big spot. I said me.
I said send me a DM. You putting it in the chat. You putting it in the chat. She can't follow instructions. It's in the chat.
Oh, well, it's their account.
Thank you, Lump. Jesus.
And then somebody sent me a friend request. Who sent me a friend request? Oh, Sarah.
Information to post.
All right. So I got Kim. I got Sarah.
I put it in the Q&A section, and it says for big spider.
Sherwin, tell your wife what the difference between the chat and the DM is.
Let's see.
Hey, Sherwin, you good player. We can tell who wife ain't sliding in nobody DMs because she can't find the DM. You good, Sherwin. You ain't got nothing to worry about. She can't find the DM.
He said you were good because I can't find the DM. He told me to send him me, and I'm sending it all in the wrong place.
So we got
Wait a minute, let me mute.
We got Kim, Sarah, Shawnee, Deborah. All right, those I send y'all a link. I send y'all a oh, thank you. I send y'all a link. So Kim, Shawnee, Sarah, and Deborah. I send y'all a link. It's either gonna be like Tuesday evening or Wednesday morning. Cause I usually make the link either like that night or that morning. And I'll send y'all a link for the tape read. That's it for the week. We ain't gonna do no more for the rest. I told you it's just gonna be sporadic throughout the week. This how we gonna get back to the old school feel of the pop-up tape reading sessions that we used to do back in the day, right? But since I tape read 3 times a week with the Diamond members, that's a lot to try to do pop-ups outside of that tape reading. So, hey, on the price action recaps, once a week, I'm just gonna do a spontaneous, hey, who in here? If you're in here, you're not a Diamond member, you're gonna be in the next tape reading. That's how we're gonna do it. To get back to the old school feel of the what's the name? All right. All right. That's it. That's all I got. I appreciate y'all for hanging out with me, man. Oh, before we go, I I ain't gonna show Al Gore's internet, but gang, if y'all want to see my son pictures that we took when he went with his went to prom with his girlfriend the other night, y'all stay in the Zoom and I'm show the pictures, my proud father moment. YouTube, I'll holler at y'all tomorrow at 6 for the overnight price action recap. Y'all take it easy. Y'all enjoy y'all night.